Thank you for joining, everyone. To invest in the stock market, you don't have to be an official investor for the most part. Everyone can do so. And once you've made your first investment, you'll be joining the ranks of investors all over the world who use the stock market to create long-term wealth. But first, you must understand what the stock market is, how it operates, and a few basic investing strategies. What is the stock market exactly? The word stock market is most often used to refer to one of the big stock market indices, such as the Dow Jones Industrial Average or the S&P 500. Since it's difficult to track every single stock, these indexes focus on a subset of the market, and their output is regarded as reflective of the entire market. The stock market may have risen lower, or the stock market may have closed up or down for the day according to the news headline. Typically, this means stock market indices have risen or fallen, implying that the stocks within the index have gained or lost value as a whole. Those who buy and sell stocks expect to benefit from the fluctuation of stock prices. What is the stock market and how does it work? The workings of the stock market are fairly straightforward. The stock market, which works similarly to an auction house, allows buyers and sellers to negotiate rates and make trades. The stock market is made up of a network of exchanges, including the New York Stock Exchange and the NASDAQ. An initial public offering, or IPO, is when a company sells shares of its stock on a stock exchange. Investors buy those shares, allowing the company to raise funds to expand its operations. The exchange then monitors the supply and demand of each listed stock, allowing investors to buy and sell these stocks among themselves. The price of each security, or the levels at which stock market participants, investors and traders, are willing to buy or sell, is influenced by supply and demand. Buyers submit a bid, or the highest price they're willing to pay, which is normally less than what sellers ask for in return. The bid-ask spread is the name for the difference. A buyer must raise his price or a seller must lower hers in order for a sale to take place. This will appear complex, but the majority of price-setting calculations are done by computer algorithms. When buying stock, you'll see the offer, query, and a bid-ask spread on your broker's website, but the difference in most cases will be pennies, so it won't be a big deal for beginners and long-term investors. Stock exchanges were most likely conducted in a physical marketplace in the past. The stock market now operates entirely electronically. Thanks to the internet and online stockbrokers, each exchange is made on a stock-by-stock basis, but because of news, political events, economic indicators, and other factors, stock prices frequently shift in lockstep. What is the current state of the stock market? A wide market index, such as the S&P 500 or the DJIA, is often used by investors to monitor the stock market's results. The chart below depicts the stock market's current output as determined by the closing price of the S&P 500 on the most recent trading day, as well as the S&P 500's historical performance since 1990. Stock market data is subject to a 20-minute delay and is provided exclusively for analytical purposes, not for trading. What is the concept of stock market volatility? Although investing in the stock market entails some risk, with the right investment strategies, it can be achieved safely and with little risk of long-term losses. Day trading, which entails buying and selling stocks quickly based on price fluctuations, is extremely dangerous. Long-term investment in the stock market, on the other hand, has proved to be an excellent way to accumulate money. Before adjusting for inflation, the S&P 500, for example, has a historical average annualized total return of around 10%. On a year-to-year basis, however, the market will rarely have the return. In some years, the stock market will end up considerably lower, and in others, it may end up significantly higher. Market instability, or times when stock prices rise and fall suddenly, is to blame for these big swings. If you're regularly buying and selling stocks, there's a fair chance you'll make a mistake at some point and lose money by buying or selling at the wrong time. The trick to investing safely is to stay invested in low-cost index funds that track the entire market through ups and downs so that your returns match the historical average. What method do you use to invest in the stock market? You could already be investing in the stock market if you have a 401k through your employer. In 401ks, mutual funds, which are mostly made up of stocks from a variety of companies, are popular. Individual stocks may be purchased using a brokerage account or an individual retirement account (IRA). You can open both accounts with an online broker and use them to buy and sell investments. The broker serves as a go-between for you and the stock exchanges. There are risks associated with any investment. Stocks, on the other hand, bear a higher risk and a higher possible reward than other investments. While the market's track record shows that a well-diversified stock portfolio would grow in value over time, stocks may also experience sharp drops. You may invest in an index fund or an exchange-traded fund to create a diversified portfolio without having to buy a lot of individual stocks. By holding all of the stocks or assets in an index, these funds tend to passively mirror the index's results. Index funds and ETFs, for example, can be used to invest in the DJIA and the S&P 500, as well as other stock indices. Stocks and equity mutual funds are perfect for long-term investments such as retirement, but not for short-term investments, generally defined as money you need for an expense within 5 years. With a short-term investment and a tight deadline, you're more likely to need the capital back before the market has recovered its losses. Thanks, this is a general summary, everyone, and as a beginner, likely all you need to know to get started. If you haven't opened a brokerage account for investing already, that would be your next step. We like Vanguard. Please make sure to like, comment, subscribe. If you're still watching, you must be serious about investing. Stay tuned for more videos.